Imagine a single company so monumentally wealthy that it makes today's tech giants look like small-town businesses. Take Apple, Microsoft, Amazon, and Saudi Aramco. Combine their entire market value. Stack their balance sheets together. You still fall short of the valuation achieved by a quiet 400-year-old enterprise operating out of a tiny European republic. When we talk about old money, dynasty, and the mechanics of raw capitalism, our minds instantly drift to the typical icons, the Rothschilds, the Rockefellers, or Wall Street's modern elite. But the blueprint for the entire modern financial machine wasn't drawn up in New York or London. It was forged by a corporate titan that engineered the world's first initial public offering, IPO, built the first official stock exchange, and laid the foundations of global corporate governance. This is the bizarre, high-stakes story of the Verenigde Oost-Indische Company, the VOC, the Dutch East India Company, and the desperate royal dynasty that bankrolled it, the House of Orange. To understand how a corporation transformed the psychology of wealth, we have to travel back to 1580. A geopolitical earthquake is fracturing the Iberian Peninsula. Spain has just annexed Portugal in a personal union. At a stroke of a pen, two global superpowers merge under a single monarch. Together, Spain and Portugal control the seas, commanding vast empires stretching across Asia, Africa, and the Americas. The balance of global power shifts overnight. For a small cluster of low-lying provinces on the edge of Europe, this union is an existential death sentence. The Dutch are locked in a brutal, seemingly hopeless war for independence against their Spanish rulers. Now, they face an unstoppable colossus. The Dutch know they cannot match the Spanish crown with raw military might alone. Cannon fire and muskets require gold, and their coffers are bleeding out. To survive, they have to build a radical new kind of weapon. They decide to weaponize private capital. In 1602, under intense political pressure, 7 competing, cutthroat private trading companies merge into a single entity, the VOC. On the surface, it looks like a standard merchant collective, but beneath the timber decks, the VOC is designed as an unprecedented machine of economic warfare. It doesn't just trade, it possesses sovereign powers. It commands heavily armed fleets, maintains private armies, builds massive fortresses, and wages total war across the globe. But the most revolutionary aspect of this corporate war machine isn't its military hardware. It is its financial infrastructure. For the first time in human history, ordinary citizens can buy a piece of global conquest. The VOC can scale at a pace no kingdom can match because it doesn't rely on a monarch's personal treasury or crushing wartime taxes. It manufactures wealth through the open market. This is no longer wealth tied to fixed land or hereditary titles. This is wealth manufactured at scale, driven by investor psychology. While the merchants draw up the commercial blueprints in Amsterdam, a desperate dynasty watches from the sidelines. The House of Orange is one of Europe's most prominent bloodlines, yet they hold no kingdoms. They possess a fragile title and an uncertain peace in a republic completely dominated by wealthy merchants. In this brave new capitalist world, traditional nobility carries little weight. The family is squeezed from all sides. Amsterdam's Republican elites want to strip their influence, and Spain wants to extinguish their line entirely. The House of Orange faces a stark choice: adapt to the market or fade into historical irrelevance. They can no longer rely on feudal land rents or inherited gold bars. They must embrace the new religion of capital. The House of Orange doesn't manage the daily operations of the VOC, but they strategically bankroll it. They tie their geopolitical survival directly to its corporate success. This isn't a symbolic partnership. It is cold, calculated leverage. Decades later, that transactional alliance solidifies into absolute power. Descendants of the dynasty, like stadtholders William IV and William V, who serve as governors and magistrates, eventually ascend to become the official presidents of both the VOC and its transatlantic sibling, the West India Company. WIC. Through corporate dividends, a family without a throne achieves undisputed European dominance. The VOC carries the Republic's flag, but it builds the empire of a silent dynasty. At its absolute peak, the Dutch East India Company achieves a staggering modern-day valuation of over $7.9 trillion. To put that into perspective, the most valuable corporations in the modern world trade at only a fraction of that amount. Between the early 1600s and the mid-1700s, over 1 million people board massive corporate cargo ships bound for Asia. These aren't romantic explorers. They are employees of a megacorporation. Sailors, clerks, mercenaries, and craftsmen deploy across Ceylon, Java, and Bengal to enforce corporate interests, often at the barrel of a gun. This unprecedented scale rests securely on three structural pillars: a ruthless state charter granting total regional monopolies, the liquid capital of Amsterdam's financial elite, the sovereign protection of the House of Orange. The VOC corporate charter functions as a mandate for state-level power. The board of directors signs international treaties, prints its own currency, raises private armies, and governs sprawling colonies. By 1619, the company violently seizes Jakarta, renaming it Batavia. It transforms the city into a global commercial command hub, establishing a permanent architectural and cultural imprint that reshapes the region for 3 centuries. To sustain this planetary footprint, the VOC requires an uninterrupted flow of cash. Short-term loans from wealthy nobles are too volatile. The company needs a permanent, self-sustaining financial ecosystem. In August 1602, the VOC executes the world's first true initial public offering. They open their ledgers to the general public, inviting ordinary citizens to invest long-term capital into global trade. As public money floods into the company, investors experience a psychological phenomenon we now call FOMO, the fear of missing out. From an initial baseline index value of 100 in 1602, VOC shares skyrocket to an astonishing peak of roughly 1,000 by the 1720s. But funding a global empire with public money introduces massive psychological risk. What happens if a fleet sinks in a storm? What if a rival nation burns a warehouse? To soothe public anxiety, the Dutch invent a legal concept that permanently alters global business: limited liability. The limited liability revolution. Before the VOC, if a business failed, creditors could seize an investor's home, land, and personal belongings. The VOC introduces a legal shield. Shareholders can only lose the exact amount of money they explicitly choose to invest. Their personal assets, homes, and families remain completely safe. Confidence skyrockets. The company prints physical share certificates that can be signed, stamped, and traded freely. For the first time, wealth flows fluidly from hand to hand, town to town, without requiring royal decree or family inheritance. This gives direct birth to the world's first secondary market, the Amsterdam Stock Exchange. Soon, traders move past simple buying and selling. They begin betting on future prices, creating short selling, options, and advanced hedging strategies. This financial model expands far beyond Dutch borders. In 1688, amidst profound political turmoil in England, British parliamentarians seek a Protestant leader to take the crown. They turn to William of Orange. William arrives in England with an invading army and a mind trained by the merchants of Amsterdam. He doesn't view markets as an obstacle to monarchical power. He views them as an instrument of statecraft. His reign unleashes the financial revolution in Britain. England establishes the Bank of England, creates national public credit, and begins funding its global military operations through capital markets. The Dutch financial blueprint becomes British law. Decades prior, Dutch corporate ships had already crossed the Atlantic. In 1624, the Dutch West India Company establishes a small, organized trading outpost at the southern tip of Manhattan Island, naming it New Amsterdam. When the British capture the settlement in 1664 and rename it New York, they wisely choose not to dismantle the underlying Dutch architecture. The legal frameworks, credit habits, and commercial customs remain completely intact. Throughout the 1700s, the financial elites of Amsterdam and London operate in lockstep. Amsterdam's stable, bank-oriented deposit systems merge seamlessly with London's highly volatile, speculative security markets. This financial DNA travels straight across the Atlantic to New York, laying the physical and institutional groundwork for Wall Street. But history proves that even the most powerful monopolies have human limits. By the late 1700s, the VOC begins to fracture under its own massive weight. As corporate oversight fails to scale alongside profits, systemic corruption poisons the company's regional governors. Sluggish decision-making, skyrocketing military expenditures, and fierce competition from flexible British and French rivals surround the company on all fronts. The market loses its tolerance for rigid corporate monopolies. In 1795, facing complete financial insolvency, the Dutch government steps in, nationalizes the company, and allows its legendary 200-year charter to quietly expire. The corporate empire collapsed, but its structural architecture endures. Today, the Netherlands remains a powerhouse of international finance, hosting trillions of dollars in inward and outward foreign direct investments. And hidden within this modern web of global capital, the legacy of the House of Orange Nassau persists. The royal crown is ceremonial, but their corporate influence is anything but symbolic. The family maintains deep, quiet positions across primary energy, banking, and industrial trusts, continuing a 400-year-old tradition of ruling not by divine right of the sword, but by the subtle, absolute power of the balance sheet.